Welcome everybody. My name is Brad Fall. I'm a real estate agent with ERA Greater North Properties here in Cadillac.
And I'm Seth Houk. I work for Mortgage One here in Cadillac as well.
So today we're going to be talking to you about the home buying process from a lender perspective, and then from a real estate perspective, and what you should expect going through the process. I know for me personally, when I am meeting with a new client, we're just getting started, first time home buyer, let's say, and a lot of times I think that they should start with a realtor, which although that's great, we can kind of get you pointed in the right direction and help prepare you for what's to come. We actually recommend that you start with a lender first.
So typically, we like to have somebody come to us first just to get an idea of where they're at, and generally our goal is to get them pre-qualified for an amount that somebody can afford and is comfortable with the payments before we go send them to a realtor to go shop for homes. So there's some important criteria that we go over first. This is assuming that you're going to use a mortgage to purchase your home compared to buying with cash or a land contract. Finding a lender is kind of that first step, and we always recommend choosing a local lender. There's a couple reasons for this. One being that we truly care. We live in this community, we're familiar with it, and there's a lot that goes on in the back end where that's important.
It's nice when we're house shopping too that the lender's going to know the house that we're talking about. They're
Right.
going to know the street that we're on. They're familiar with the area.
Exactly. So not to mention, taxes are a big part of our mortgage payments. Being familiar with the taxes that are going to be involved with your payments is very helpful to qualify you correctly. Choosing your lender, that's a big first step that we have, and finding somebody that you can talk to, meet with, that's what we're here for.
Yeah, absolutely. We always recommend when we're meeting with the lender, you want to find somebody that you can get along with and that you like, because you're going to be spending a lot of time with them.
That's
so
right.
Luckily,
That's
Seth here is a pretty likable guy.
Yeah,
so,
we try.
So Seth, I know they meet with you, they're ready to get started, they're getting all of their material ready for you. What does that application process look like?
Yeah, definitely. So the application process is our next step. So the ideal timing that we'd like to start this is actually a few months before you're looking to buy a home. And this is going to help us understand your financial situation to put you in the right position for savings. And then also, a lot of people aren't familiar with this, but we help a lot with your credit. And credit is a huge part of your application and setting you up for what you can afford for your home.
Question on that too, Seth, not to cut you off, but I know I get asked this all the time. Is there a magic number? Is there a number that a buyer should strive to be close to be able to be pre-qualified for most homes?
Not necessarily.
No?
The higher the better. The higher credit you have, the better interest rates you're gonna get, which is huge, because over the life of a 30-year loan, you're paying a lot of interest.
Right.
And that can be magnified by your credit score. Your credit score will qualify you for different programs.
Okay.
So luckily today we have a lot of programs for lower credit scores, and then there's benefits for programs for having a higher credit score as well. So I wouldn't say there's a magic number necessarily, but the higher the better.
Got it.
Definitely. So that kind of jumps into next step of our application process is one, getting ready to provide a lot of documents. This is something that we are gonna just come back to you more and more and more on. And typically what happens is the more that we find out about your situation, the more documents that we're required to ask for. And so all of this is to help us set up a picture to give to our underwriting team so that they can give the final approval, the final go-ahead once you're ready to go. So
if you could tell anybody to prep, is there some typical documents that you'll know you're going to need, whether it's like some bank statements and things like that?
Yeah, definitely. So a general list of documents that we're going to start with is going to be 30 days worth of pay stubs. It's going to be your last 2 months of bank statements, your last 2 years of W-2s, and your ID. And those are kind of like our base level of documents that we're going to be asking for up front to get us started. And then on top of that, you're going to be filling out the application, and we have a really cool online app actually that you can use to fill out your application, and it only takes about 5 to 15 minutes depending on how familiar you are with your stuff. But this is a link that we send to you, and you can fill it all out. There's some questions in there you might not be sure about. You can always leave those blank, and we'd be more than happy. That's our job, fill in those gaps. And so that's where we have you jump in, and
we'll attach the link down here or up here, wherever we're
wherever we put it. But yes, it will be on here. Absolutely. So pretty straightforward with the application process. Those documents up front, and then filling that out online, and we're running from there.
So then it goes back to me. So now we got the fun part. So after you're done with all the paperwork, the next step is to find a realtor. So there's a couple things that are really important when finding a realtor. Again, finding somebody local is very important for many different reasons, but you want to have somebody that is an expert in the area that you were looking to buy in. But you also don't be afraid to interview your realtor. I think a lot of people don't know they have that ability, but we are here for you, and you want to be working with somebody that is going to be beneficial for you, and that again you get along with somebody that you can spend the time with, that you trust. So don't be afraid to reach out to a couple different realtors, ask them some questions. Are you full-time? What does your schedule typically look like? What can I expect from you as an agent? Some of those probing questions just to see who's going to be the best fit for you. But after you find a realtor that you're comfortable with and you want to move forward, then we start looking at some homes that match what you're looking for. So we'll have discussion over what are your must-haves, whether it's, the amount of beds and baths or square footage or size yard or how many acres you want, whatever it may be. And we'll refine down our search together, and we'll pinpoint some of the houses that are most closely fit to your needs and are also within your budget with that pre-approval that we've already gotten from Seth. And you're now buying with confidence because you know how much you can afford comfortably.
Yeah, and I was going to touch on that too, and you just brought it up, but a lot of people are going to ask, how much can I afford? How do I know what houses we're looking at? And that's really going to come from the lender side. After the application process and we get that financial picture, we're gonna run you through our system, and we'll get you pre-qualified for an amount that is going to be comfortable for you, that you'll be able to make payments on. And that's our job, is to put you in a home that you can stay in, and make sure that we have everything we need to find that range for you, so that you can go to Brad and then go shop for that.
A buyer might see, I'm pre-qualified up to this amount of money, but then once we actually start to look through and you're like, okay, it's going to cost me X amount per month, I'm really only comfortable up to this amount. So that way we can work together on that and see, at the end of the day, our goal is for you to be comfortable throughout the entire process and not to be stretched too thin, and to make sure that you're getting into what it is that you want. So we find a house that you absolutely love and you're ready to write an offer on it. So we will then go through, if there was a number that you had in mind that you would like to try and get the house for, I'll be there to advise you along the way and just kind of see what local comps are coming in for, what's going to be a solid offer. We'll be able to discuss if we're competing or not. Is that going to change the way that we structure our offer as well, make it more or less competitive? And there's some things we can do in a purchase agreement to be more competitive. But again, it always boils down to what you're comfortable with and what it is that you want to do. So we write the offer, we get our offer accepted, and now we're handing things back over to Seth. So we're going to send that purchase agreement back to the lender to get some more information on the house, and then from you as well. So what does that look like on your end?
Yeah, definitely. So once we get that agreement, that basically means that you and the seller have agreed on a certain price and any other conditions, or anything else that you're going to put in there. And so now we can go to that house, we can start looking up those taxes. So we go and enter all those details into the loan, and then we're sending it down into underwriting again for them to take a look at it. We're working towards that final approval.
So then the next step for us, and this is an optional step, but it's one that I highly, highly, highly recommend everybody do, because it's there for your benefit, is in our offer, we'll put something in there called a home inspection contingency, where it gives you a window of time to come in and have a home inspection done. And again, it is there for you. It is yours as a tool to be able to see exactly if there are any repairs needed on the home. You know exactly what you're signing up for in that way. So it's a great tool. And not to mention, if there is anything that comes up that's catastrophic and we didn't see in the house in our first walkthrough and it came up in the inspection, this is also a way for you to withdraw an offer and continue shopping if the house doesn't work out. So
there may be some things that pop up in that inspection or even the appraisals that will trigger from our end that there's a required repair. And that could depend on the loan type. It could depend on a number of different things.
So after the inspection period is over and we're okay, we're ready to move forward as is, we know what we're signing up for, then we will have the appraisal ordered. The appraisal essentially, and feel free to jump in here, but the appraisal is telling us what the home is going to be worth, and it's also telling us what the lender is going to be willing to finance towards that home. So best case scenario, what we always are hoping for is that the appraisal value aligns with the purchase price amount. And then we're pretty much moving forward scotch-free at that point because everything is aligning and everything is good. Unfortunately, there are times where the appraisal will come in at a different value amount. To use an example, if we have a house that we wrote an offer on for $100,000 and the appraisal came in at $95,000. So we now have a $5,000 gap that we will negotiate through to see how we're going to proceed. So we may ask the seller to reduce the purchase price amount to that appraisal value being $95,000, or the seller may come back to us as the buyer and say, hey, we're requesting that the buyer brings additional funds to closing to cover the difference. But that is something that we'd negotiate through, come to terms. So what we like to do moving forward, we then get that back over to the lender to get everything finalized. What does that look like on your end?
Yeah, it's pretty straightforward. We get the go ahead, we order the appraisal, and then we're just essentially waiting for that document to come back. And again, that can depend, the type of appraisal can depend on the loan program, and there's costs associated with that as well that get wrapped up into your closing costs. But we're just looking for that value to come back because the lenders don't want to, you know, give you money for something if it's not worth it, because if anything were to happen to that, they have to sell it and get their money back.
And like we mentioned earlier too, in the appraisal process, there might be repairs that come up. That also really depends on the loan type that we're using as well. But that would also be a time that would have to be satisfied as well. We hope that it would always be minor things and we could go ahead and get it taken care of and proceed as is. But after the appraisal is finished and everything is done, then we're on the home stretch and we're ready to schedule closing and get you into your new home. So is there anything that a buyer should expect in between the appraisal coming back and then scheduling for closing?
Yes, actually. So there's going to be a couple things going on. One, us as the lender, we're going to verify your employment to make sure that you're still working where you were working when we qualified you, because we want to make sure that income is still there. We're also going to check credit again, which, you know, it doesn't hurt the credit that time around or anything. We're going to be verifying that you didn't go buy a car between the application and closing, because now that's going to throw off your debt ratios, because now you have a card payment, your credit was probably affected when you pulled credit to buy the car, etc., etc. So we will be verifying those things. So please, 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 it's the worst thing ever when you get to closing and you find out that there was a life change that was avoidable. And now we have to change course and essentially start over. So
as exciting as it is, don't go finance new furniture for your house that you're about to move it. You know, just whatever you do, just wait until after closing. You know, and then make those big decisions. So then otherwise, I mean, leading up to closing, we're going to be reaching out to a title company involved at that point. We'll be reaching out to them to schedule an appointment for the closing, and then we'll let you know, what we've settled on for the cash to close is what we call it. And so that's the amount of money that you're going to bring to closing for your down payment, for the closing costs, and everything in between. And so we'll get you that final number, get you your disclosures as well, which will show you a breakdown of everything that you're paying, and then we go to closing.